Aditya Arora as well joins in on the show right now. Aditya, hi, afternoon. What trends are you picking up as the market sees a solid rebound from the Monday crash?
I think markets are rebounding quite strongly, and oil and gas space is doing pretty well. And if I talk about the Nifty and Bank Nifty levels, then I see 51,000 and 51,500 strong resistance for Bank Nifty, and I think one should look to lighten up positions little bit over there because a lot of call writers are active at 51,000 and 51,100, 51,500. So I'm pretty neutral on index right now, and I like Pharma and FMCG space, which is outperforming since quite a while. Yesterday also, these two pockets did well, and I think outperformance could continue over here also.
Performance could continue as far as the pharma space is concerned, but just taking stock of some of the other buzzers in the trading session, Tejas Networks, HCL, both from the telecom equipment basket, are fairly active. Ramkrishna Forging, Sterlite Tech, these are some of the other names to watch out for as well. And then Piramal Pharma is perking up. Deepak Fertilizers is doing well in the trading session. Wanted to check what Fusion Micro is up to because it had opened with a gap down. 20% lower circuit is what it was logged at, and that's because the company posted a very, very dismal set of numbers, and there are some on the street who believe that tomorrow could be another down day for the likes of Fusion Micro. The credit cost jumped up to as much as 11.8%. Remember, the guidance for the full year is 3%. There have been cuts to the tune of 70% as far as the estimate is concerned of FY25. GMFL has downgraded the stock. IFL has downgraded the stock. In fact, Devang, what's your view on some of these microfinanciers? Do you think the party is over per se and it's time to turn back? Because there is those strings in the armor which are emerging as far as asset quality is concerned, and they too had to take a large provision. Devang, the question is for you. Devang, you'll have to unmute yourself. Okay, I think we'll try and probably reconnect with him and get the understanding as far as this segment is concerned. But Aditya, what's the view on some of these microfinanciers, Fusion Micro, Poonawalla, Spandana Spurti? Is there a merit to look at any of these names on the charts?
I think all these counters are beaten down since last few days. But they're approaching important support levels. If we talk about Poonawalla FinCorp, then it has approached its important support level multiple times. The stock has taken support at levels of about 340. So if we see a turnaround over here, then I think one can go long. If one has to be level specific, then one can go long on Poonawalla above 356. One must maintain stop loss at 340 and target would be 365 to 375.
The market's a bit of an uptick because we managed to scale past the level of 24,300. It continues to be similar names actually that are gaining traction right now. So your ONGC, Coal India continue to be the same. Adani Enterprises, Adani Ports has picked up a bit of a pace. Let's take a look at Reliance as well, whether there's some sort of interest post the commentary coming in from the annual report. So Infosys is the one which is up 2.5%. HDFC Bank is also doing quite okay. Kunal, would you say that today marks a bit of a reversal and bit of a bottom for the market, and from here on maybe that bull run sort of will resume and the correction would end?
No, I think it's too early to say that, Anisha, because we need to see concrete evidence of resistance being taken out, and the first resistances which we look out for is at least a 50% of the scale down which the indices have seen. So when you look at the index, the Nifty benchmark Nifty, in that case we've seen a 1100 point odd correction from 25,070-80 approximately towards 23,900 approximately. So I think in that front we would be looking at 24,500 as the first important resistance being taken out. The positive signs are that the market breadth is opening up. So I think that could probably be a very good sign that eventually over the next maybe 1 week or so, the markets could settle into a positive trading range with a bias more tilted towards the overall market breadth. And that could also be one of the another positives that sectors, you might see sectors starting to get into a uptrending mode. So I think what we need to look out for are two important points. One, in terms of technicals, 24,500 being taken out on the Nifty, that would probably be a very strong indicator that the bull strength is coming back quite strongly and we might see a sustained uptrend. And the second and the most important is sector churns. And I'm assuming that if this trend sustains, where the market breadth opens up for the next couple of days, you might see some decisive sector trends coming up.
Right, let's welcome on board Dipan Mehta as well and chat about what he's making of the market right now. Dipan, once again, a very short-lived correction, Monday meltdown, and now we're practically to where we left it off. How is it that you've dealt with the past 2 days?
Yeah, good afternoon, and thank you for having me on your show. Nothing, just stay put. I think, we have seen such down days being immediately backed by ferocious buying as we have seen today. But let's see, I think, we are in a wait and watch mode at this point of time, sitting on a little bit of cash, expecting a correction, as are so many other professional investors. And we don't know whether this particular correction is over and done with or that it can deepen further. Because, so long as the market doesn't create a fresh new high, the risk always remains that this correction can particularly deepen. So only time will tell. But I think a lot depends upon global markets and FI flows as well. But for the timing, I think as an investor, it's best to stay put and watch out and play out the earnings season and see what the numbers are coming and which are the good ideas which are coming through and which are the misses where one can exit out of them.
Fair enough. Need to stick to quality and keep on doing a bottoms-up analysis. That's the nature of the market right now. Just take stock of what's happening to Geo Financial Services. While we're tracking Reliance Industries on account of the annual report comments coming in, and that stock hasn't reacted, Geo Financial Services actually has. That stock is up 7% right now, 8% as we speak. Devin, you track this. Dipan, you track this, stock and this group very closely with respect to what's happening to Reliance, the commentary coming in from annual report, and Geo Financial Services. When the stock listed of Geo Financial Services, everybody was saying that it doesn't have a business. Not really makes sense to own it right now, but the stock has jumped up materially from there.
Yeah, that's right. And I was also in the camp which said that, we're not that positive on Geo Finance at this point of time because building such businesses at scale requires time, requires to build a solid team. And for investors to get confidence, it requires the NBFC to go through an actual down cycle, or I would say up cycle in the NPAs, and see how they've actually performed and how their risk management systems, how resilient the risk management systems are. So those have not been tested as yet. So therefore, I just want to wait and watch on Geo Finance. It's easy in India, it's easy to scale up a NBFC business, but the problems start 2-3 years down the line when the corrections start to falter and NPAs start to spike. Whether that happens in Geo Finance, only time will tell. I'm sure they have got robust risk management system. But even some of the bigger groups, like look at the way M&M Finance has played out in terms of when the downturn took place in the NBFC industry and when NPAs started to spike up, that company really suffered. So it's not just the management. A lot of other factors also come into play. So from that point of view, I think it's better to be a bit cautious and go for the tried and tested players like say Bajaj Finance or Chola Investment, which have done exceptionally well. I thought even Sundaram Finance numbers were pretty decent.
Right, interesting. Where else, Dipan, if at all, have you bought in afresh in the market? I mean, a lot of sector churn clearly at play. Banks made an attempt, fell back after their numbers. Pharma clearly seems to be a decisive winner looking at the earnings of a few of them. And then, of course, sporadically, FMCG as well has been trying to hold out.
No, I'm not buying anything just now. As I said, right now it makes sense to be a little bit in cash in your portfolio. If there's a correction, and there has to be a correction, right from 2022, post-COVID, we haven't had a serious correction. By serious, I mean a 10% type of a correction, or maybe even a testing of the 200-day moving average. And at some point of time, it will happen. One can't say how and why and when, but that's a good entry opportunity. For right now, I think if you're 70-80% invested, you're fine. The cash which you hold in your portfolio, 15-20%, 10% is strategic. It will enable you to buy into good quality businesses when there's a correction, because more often than not, investors do not have cash when there's a correction. When a correction does come, the real quality businesses can drop by 20-30% also. I know you may find it surprising because we haven't seen it, but I've been in the market for 30 years. And I know that even in a bull market, you could have quite a deep correction. And that's what we are waiting for at this point of time.
Waiting for that correction to get done. In the meantime, quickly, Aditya, before we let you go, share with us your BTSC trades.
So I like Sun Pharma right now, which is a bullish candidate. This could be bought at 1734. Stop loss is 1700 and target is 1770 to 1800. Second one is Coal India. This one is also outperforming the market and there's good strength in this counter. So this could be bought at 530.20. 505 is the stop loss and target is 560 to 600.
Any BTST trades you'd recommend?
So yeah, a couple of buy calls, and my focus would be on ABB. That's a chart which is looking attractive, formed a double bottom today at 7,700 mark, which has been a key support. So keeping a stop loss of 77.50, would recommend a buy with a target of 81.50. And Dr. Reddy is the other stock which I'm expecting in terms of a breakout. The stock has is coming out of a consolidative range at the higher end of the price trajectory, and we've seen pharma stocks doing fairly well. So expecting a breakout for Dr. Reddy, 71.50 as the target, stop us at 6,800.
Okay, so those are the BTSC trades coming in from our charters at the moment.
If you like this video, then like, share and subscribe to ET Now.